Hi Hemant, welcome to ET Now. Thank you for joining us. Hemant, we would see the beginning of earnings season now, and there is a lot of noise, not just related to earnings, but globally also we are seeing a lot of action happening, and a lot of things have been already discussed about trade wars implications. Let's discuss something which is completely related to Indian markets and where the fundamental lies, and that is earnings and how you are seeing the earnings season panning out. Let's discuss what is the Nifty and Sensex EPS which you are forecasting, say probably for 1 year, and how are you anticipating earnings, not sector per se, but from index per se, what is the growth in earnings you are envisaging?
Hey, good afternoon. So, you know the story that broadly, we start the year on an optimistic note, but as the year progresses, some sectors disappoint and mainly in the banking side. So again, this year, the expectations are of 15-20%, but with RBI announcing new, guidelines for NPA recognition, we don't know what kind of growth we can see in the, banking side. But if you see sectors apart from, banking, uh, we have a, good momentum building up in the economy, as well as margin upside. Margin continues to remain good. So rest of the market should see around 15% growth is possible. Banking remains a key variable where it is difficult to estimate, particularly on the corporate banking side, what kind of NP recognition they may have to do, and what kind of volatility it can produce on the earnings. So I will say, apart from corporate banks, we should see a good traction in the earnings overall in the market.
Hi, Hemant. Nantara joining in from the New Delhi studio. The markets perhaps have been playing a lot on the global cues, directionless a little bit. Let's see if the corporate earnings season can change that. Just to take on from what the flavor of the season has been. First it was insolvency and bankruptcy code, the corporate battles that we've seen. Now it's all the corporate governance issues that have been coming into the banking sector. Should one just steer clear from these sectors? Are people like you maybe rejigging your portfolios?
Sorry, can you repeat the question, please?
How do you approach the banking sector? Are you steering clear from it, rejigging your portfolio, whether it's private and public sector banks?
So for most of these concerns have been raised on the corporate bank side, and stock prices have corrected, and on the even historical book values and all the stocks do look cheap. Now clearly the uncertainties are there, and that's where valuations are cheap. So from a longer term perspective, if you believe that India has gone through a slow growth period, and going forward with the measures taken by the government and global economy doing well, you will see corporate activity picking up. So with a 3 to 5 year view, corporate banks clearly look good to grow, and they should combination of good growth opportunity and cheap valuation should be a good investment opportunity, and they should give a good return from a 3 to 5 year perspective. Now the challenge for an investor perspective will be to ride the volatility for the next 6 months, because next 6 months you will may see management changes at some of the banks, plus added recognition of NPAs. So that will produce its own volatility. But if an investor has a 3 to 5 year perspective, we believe that corporate banks offers a investment opportunity, and one should look at it from a long-term point of view.
Uh, since the earnings are just around the corner, I would like to ask you, what are some themes that one can look out as a beneficiary or as a stock that could see good earnings growth this time around, and that one can bet on ahead of the earnings season?
So we believe that still consumption has been one of the driving force in the market, or in the economy rather, and that segment should continue to do well. So they will continue to show good growth in revenues, as well margins will sustain. So consumption and retail oriented banks will continue to show good growth, and that is sweet spot. Global economy has been doing well, so some of the commodities will come out with strong numbers, and they will continue to see traction. There was some softness in the last quarter, but I think year on year still you are looking at higher prices. So overall results, they will show good earnings growth. And third will be you have seen pick up in the infrastructure activity in the economy, particularly roadside. Like there was very good ordering as well as execution happening. So that part of the economy and market companies can do well. So broadly speaking, consumption, globally linked sectors and infrastructure. These three, I think, so can show good traction in earnings growth this season.
Okay, fair enough. We'll leave it at that. Hemant, thanks a lot for coming on board to talk to us about the various sectors that you're keeping on your radar at this point of time.